Robert Whichello. He's head of emerging market debt at BNP Paribas. Robert, thanks a lot for joining us. You know, did this come as a surprise to you?
I think it's definitely caught the market by surprise. I think you could only look at the performance of the debt with Dubai CDS out 100 basis points over the last 3 days, moved from 225 out to close to 700 this morning. So that reaction clearly tells you that investors have been caught out and a little bit surprised by the move, and I think the overall feeling was that something would be sorted out around this Nahil maturing debt.
But is this really likely to result in more global reverberations and not just a loss of confidence in Dubai, but a loss in confidence in terms of emerging markets to some extent?
I think clearly within the GCC we've seen a change in sentiment over the last couple of days, and that's really partly due to the Eid holidays and Thanksgiving that has exaggerated any of these moves. But I think I have a high degree of confidence that the likes of Abu Dhabi, Qatar and Saudi Arabia will not be adversely affected in the medium term. I'd expect them to have access to the global bond markets over the as we go into January next year. So I think some of those moves have probably been a little bit exaggerated by a lack of liquidity at this time of year. And in terms of further contagion with emerging markets, I think it will be limited. I think it's important to realise that we've had a very strong rally in credit spreads over the last months, and the vast majority of debt issued from either Qatar, Abu Dhabi, corporates and sovereigns is still trading significantly above par. Investors have done pretty well. It's really the real widening has been seen in Dubai-related debt. Financials, as we've seen in Europe, have underperformed, with clearly the ones with the biggest exposures.
Robert, you've described this as the perfect storm. How so?
Sorry?
You've described this as the perfect storm. How so?
Well, I think because you have the Eid holiday with the Gulf out, and as a result a large part of the buying base not there, Thanksgiving with all this debt being US dollar denominated, you're basically in a bit of a vacuum in terms of the investors and the traders in this product. So I think as a result that's increased the volatility one would have expected to see. But over medium term, I don't expect this to be at the start of something bigger. I think Dubai's been an issue for quite some time, and I think it will be quite well contained within Dubai, and I wouldn't expect it to spread to the rest of the GCC, but also the rest of the emerging markets.
And what of Dubai itself? How does it get out of this hole?
Well, as you've seen, there's been some comments from the Sheikh overnight. I'm sure there is a lot more detail to come out over the coming weeks that none of us are party to at present. I think this is the beginning of a story and not the end. I'm sure there's a lot of discussions going on with banks around bilateral debt over the coming days. So I think when we see the region return post the Eid holidays, I'd expect to see more detail, and if anything, this will help some stability in Dubai.